In previous videos, I've probably come across as pretty bearish on the GE reverse stock split. From the negativity in those clips, you may think that I'm completely negative on GE. I've been preparing for some follow-up videos on the GE reverse stock split, like a 6-month and a 12-month follow-up video. In preparation for this, I've been doing quite a bit of research, and I've come to the conclusion that I may have missed a couple examples that may point to positive results from reverse stock splits. I previously portrayed reverse stock splits as negative as bearish because the NYU research points to this conclusion. Additionally, reverse stock splits are the exact opposite of stock splits, and stock splits are usually seen by the market, interpreted by the market, and perceived by the market as bullish. Finally, I am most familiar with reverse stock splits in the ETN realm. ETN such as VX and SQQ, and in these situations, reverse stock splits are negative. It means that the price of the ETN in question has gone too low and needs to be increased. By the way, I'm Jonathan. I bring you the market in context through the lens of believability so that you can save time, you can trade and invest your way, and you can make money. Example number 1, Citibank. Citibank was caught up in the catastrophe of 2008, and during this time, Citibank stock crashed. Citibank lost a lot of market value, market cap. Citibank also lost a lot of money. They were part of financial crisis in the sense that they had a lot of these loans that were the problem children. As a result of the precipitous decline in the Citibank stock price, Citibank's shareholders decided they would like to do a reverse split. In the end, it took a second vote in order to get this reverse split pushed through. When the reverse split finally went through in 2011, Citibank did a 10-for-1 reverse split. So if you were holding 10 shares of Citibank, you would now be holding 1 share of Citibank. If we look at the long-term chart of Citibank, we can see that the early 2000s were very good. Citibank, along with some of its peers. If we look at the financial crisis, we can see how far it fell, and then we can see where it bounced. In today's reverse split share numbers, we can see that Citibank was around 9 per share in the lows, in the bad times, the dark times. Now, in post-reverse split world, Citibank has recovered to more than $70 per share. This leads to the question, is Citibank a good example of a reverse stock split working out for shareholders and working out for the company itself? You must answer this question for yourself. To me, there are 2 answers. The first answer is if you were a holder of Citibank before the financial crisis, back here in 2006-2008 range. If you bought in then, you've never recovered. However, if you bought in here in 2011, somewhere around this $9 per share number, then you've had a really good run over the last decade. Facts are, if you had perfect timing, this reverse split probably worked out for you. Next up, let's talk about the Xerox reverse stock split. In order to find the Xerox reverse stock split, we must fast forward to 2017. In 2017, Xerox reverse split their stock in order to make up for the spin-off that they were planning to do for their business outsourcing services division. Conduent is the new name of the company that was their business outsourcing services division. Conduent was spun off because it is no longer strategically relevant, meaning that it no longer fit into the plans of Xerox board, and it was different enough from core operations that they thought it'd be better off on its own. This reverse stock split from Xerox in 2017 was done for a different reason than the Citibank reverse stock split, and also for the GE reverse stock split that took place recently. However, the question remains, is it successful? Did the company and the investors benefit significantly from this reverse stock split? That is the question I put to you right now. Maybe we have to look at this a little bit differently than the Citibank reverse stock split example, because Xerox does not have the clear upward trajectory. It's not just going up and to the right all the time the way Citibank did. It was also for a different reason, and this different reason seems to have had an impact on the company. Checking out the timing, again we see that Xerox had peaked before the reverse stock split, and it's only the investors that came in after the reverse stock split that would have benefited. Xerox did not benefit from the reverse stock split because their share price today is lower than when they split it, or at least at the beginning of 2017. If you receive value from this video, please help me out by smashing the like button. Now, my third example of a reverse stock split that probably went better than I would like you to believe, the Alcoa reverse stock split. And for this, we go from 2017 back to 2016 to see what Alcoa did. Alcoa was spinning off a division, and in essence, what they did was split the company into 2. They split the company into Alcoa and into Arconic. Because they're splitting the company into 2 different companies, the board wanted to increase the stock price in order to have more liquidity in the market and less volatility for their investors. That was the reason that they gave at the time. Looking at the chart of Alcoa, we can see that Alcoa had some good times and some bad times, and overall Alcoa is up a bit since their reverse stock split. However, Alcoa seems to have tied themselves to the natural resources cycle, and during the sell-off in 2020, they took a huge hit. As the recovery has taken place, Alcoa has also recovered, and their stock price has recovered. We can see in the larger view that Alcoa has not reached its heights of pre-reverse stock split numbers. This is again the question. Was I right to be critical of reverse stock splits? What did you think of these examples? Did I miss any examples that would have been the basis for why a stock should be reverse split? Leave it in the comments down below. That's all I have for you today. Jonathan out.